We are seeing cuts to start off, and what's really leading the losses this morning is the Japanese market.
The private sector will be taking 40 to 45% of the total orders.
So the Nifty Bank, the onus is on it. You know, if the banks are going to be delivering very good earnings growth.
Even in Q2, the loan growth was north of 7% plus.
And there's a lot of traction in the broader market. So the mid-cap index is now up almost 0.7%.
What the market is telling us at this point of time is valuations don't matter.
Quarter on quarter, we saw, in fact, just about 1% price erosion.
There should be healthy growth in the system as far as the loan book is concerned.
Strong demand that we are seeing from both the domestic sector as well as the commercial and the industrial sector.
Whatever happens in the January 30th hearing is the critical point.
Look at the bank nifty now, 48,000 and counting.
That it had gone ahead and entered into memorandum of understandings with the Gujarat government.
They have called it their top pick in 2024 from the realty space.
But it's turning out to be a terrific Thursday for our markets. The Nifty is at the day's high right now, 21,655 now.
Well, the bulls have announced that they're very much around. They took a breather, maybe a day or two, but they're back with a bang, and the buyers have been on the screen right from the word go. We haven't had a trending update, but the fact that the market could, bounce back in this style when the global cues were still negative, Asian markets were really under pressure. I think the bulls are really announcing who's the boss on the street.
Well, that's right. Earlier this morning, Surabhi, we made this point that the Nifty Bank, if something has to bounce, the onus is on the Nifty Bank because it's a domestic-facing theme, and that has to lead the way. And I think that's precisely what's happened today, because the Nifty Bank, as we speak, is up closer on 400 points. But we could be in for a little bit more excitement. And I say that because on the Nifty, we are holding at around the 21,650. Today, we have weekly expiry that plays out. So if we pull up the Nifty, you'll see we're at 21,650. The high of the day is around 21,670. Positioning is such that we'll defend 21,680 odd. So if we can get another 30 points in the upward direction, then maybe we see a further bounce. For the time being, position is such that we remain in this range. And it's good to call the index right? The Nifty Bank was the one that we discussed earlier today. And that's really the big outperformer today, the IT index, as flat as can be.
Okay, well, let me welcome Ekta on the show. Good to have you on Closing Bell as well. I think Ekta's been the lucky charm. The market was in a funk last couple of days, but I think you brought out the green.
Absolutely. Not to mention that, I think the shirt color is just about matching. You want to call it green, then green. If you want to call it blue, there are no blues for
Today
the markets.
Today we call it green.
We'll call it green. But definitely the markets are back to their winning ways. Not to mention that the mid-caps are at a fresh record high for the second straight day. So that's exactly where the interest really continues. Just to give you a couple of statistics from the BSE, the advanced decline ratio currently stands at around 2:1 and has been holding steady at those levels through the trading session. We have 448 stocks which are at fresh 52-week highs in today's trading session, and only 9 stocks which are at fresh 52-week lows. So that fervor, that interest seems to be back both in the mid-caps. The mid-cap index is up around 1.3%. Don't forget the small caps, because the BSE small cap index is up around 1% at this point in time. So that, let's see whether there's any kind of tempering of sentiment. But as of now, all guns blazing.
Well, indeed. And, stocks like Voltas as well, that's financial performance hasn't been great. They've been losing market share, margins as well under pressure. But if you look at it from the recent lows, now everything is good at a particular price. And Voltas is one such stock. I remember the last quarter, the stock went down to around 800 rupees. From there, the stock is up closer around 25% approximately. And we're yet to see any kind of meaningful recovery in the numbers. But that's what it is, right? Everything's good at a price. And it seems at that price, Voltas is quite attractive. And that's why the stock is up and about. But let's get in Mitesh Thakkar. Mitesh, well, today's rally has come about and it'll be relief to the bulls. But how do you trade from here on? If someone was sitting a long position, what would your advice be? Take money off the table, or you'd believe that the markets are still good for more?
So, good afternoon, Nigel. See, I think, this is not a market which is going through a correction. It was mainly a pullback. And while I still don't have signs of an uptrend, I think that maybe around 21,500, 480, if we can hold those levels, then it could be a market which could chop around between one on the downside, 21,500, 480 zone, and on the upside, 21,800, 820 levels. So this is a market which will take a breather, take a pause, doesn't look weak. The idea is to be either look at buying near support levels of around 21,500 and then see if that level holds. You can take a 50-point stop from there and be nimble in booking profits for the next few days. close it around 21,800. Though there is a midpoint pivot at about 21,690. You might want to take some part profits over there and then sell the balance at about 21,800. A fresh breakout will happen only once we start getting past 21,800. That could then see the Nifty try and attempt 22,000 as well. Having said that, on the stock side, I have a buy on Chola Finance. Keep a stop at about levels of 1260. Look for targets of 1350 here. And India Cement is the other one, which I would recommend buying with a stop just below levels of 269 and a target of 290 can be looked at.
Okay, all right, Mitesh, thanks very much. Mitesh, just stay on because, we want to discuss the sector of the day with you as well as our fundamental guest. We'll have, Devan joining in just a bit. The sector of the day has been real estate, and there's something, absolutely terrific that's going on. This is after a stupendous run in 2023. The gains today simply can't be ignored. Now, that's the Nifty Realty Index. I just want to call out the stocks as well. Sobha is up 20%. This is on the back of a very strong move yesterday. Of course, there's a Motilal note. It's one of their top picks for 24. We know that. We'll get to that in just a bit. But it's not Sobha alone. The entire sector, Puravankara 17% higher. You've got DLF, you've got a Kolte Patil, you have a Keystone Realtors. And these are gains between, 10 to 20%, double-digit gains coming in on the back of what has been already a very strong rally. So something surely going on. So let's discuss the fundamentals. Let's get you some technicals on this as well. So we have Sonal joining in to detail out, what the triggers perhaps are like. And then we'll have Hormaz join in just a bit on a few of the technical factors that could be helping stocks today. Sonal, let's start with you first.
There's no stopping the moves that we are seeing in the Nifty Realty Pack today at a 15-year high and across the board big moves. Something like a Godrej Properties is higher in trade by around 8 to 9%. We have Sobha, Kolte Patil, Prestige Estates, you name it, and that real estate stock is surging in trade. While there are no exact reasons for these stocks to go higher, there are some notes, especially for Sobha. So Motilal Oswal has called it its top pick for 2024 from the realty space. They say it is set to outperform now after the underperformance that we saw in last couple of years. Focus is on unlocking their vast land reserve and exploring external growth opportunities through the healthy balance sheet. They have a target price of 1,400 rupees a share. And over the last 3 years, the management has focused on bringing down their debt. It has been cut by 1,300 crore rupees. And this will lead to better cash flows for the company as well. However, there are resolutions which are required for ongoing cases. One is the Gurugram ED case. Second is the Chennai IT raid. And third is the Sobha City occupancy certificate case, where they have said there were some lapses and they are ready to pay the penalty as well. Motilal Oswal has revised the sales estimates by 4 and 12% for the next financial years. That's specifically for Sobha, but do remember these moves are coming ahead of the Q3 operational updates which are expected from Prestige, Macrotech, Puravankara and Sobha itself. Now just the macro picture, Anirok in its recent report did indicate that housing sales hit fresh peak in 2023. Top 7 cities saw 31% yearly growth, and it was led by Mumbai region, which was up 40% growth in terms of sales. NCR was very muted, up just 3%. Bengaluru was higher, so was Hyderabad and Chennai. But now let's talk about valuations, because these stocks are surging, and we have seen the valuations to be anywhere between 4 to 5 times price to book. And after this, if we look at the net asset value, most of them are trading at their net asset values in terms of market price. So yes, looks like it is all in the price, but we'll have to see what the Q3 updates look like going forward.
Okay, all right. Definitely, Sonal, we will wait by for the quarterly updates to see the proof of the pudding in terms of what the real estate companies are reporting. Just want to point out for Sun Pharma, the stock is holding up, but we've managed to access those 6 observations which were issued to its Dadra facility. Remember, this particular plant was inspected from the 4th to the 15th of December. The 6 observations are flashing on your screen. I went through the Form 483. It could probably take some time for Sun to resolve those observations. The reply to the US FTA would be key. But nonetheless, those are a couple of key details from that. But let's stick to the entire real estate space. Hormuz is now here to tell us and explain why the 50-day moving average has been such a key level for the Nifty Realty Index, which is at a multi-year high. Hormuz.
It's a very interesting trend that came up, and if you can take the 1-year chart starting from April of last year of the Realty Index, and you can see that from the start of the year until the 6th of April, the 50 DMA was proving to be a resistance point. There were multiple attempts to cross that 50 DMA, but the index failed to do so. However, on the 6th of April, the index closed above the 50-day moving average for the very first time. And since then, that 50 DMA has become a support level. So now there have been multiple dips that the index has seen in October, August, November of last year. Every time the index dipped to the 50 DMA, it has taken support there and it has bounced from there. But the major part is, for the first time when the index closed above the 50-day moving average, which was on the 6th of April, since then the index has doubled. Now, if the index has doubled, the stocks have done even better. Prestige Estates has tripled. Sobha has almost tripled. Macrotech is up 130%. So is Swan Energy. DLF has almost doubled, as has Godrej Properties. And even the worst performer on the realty index is Mahindra Life Spaces. That stock is also up 54%. So it shows the extent of the rally that these stocks have seen. Now, the analyst community has been bullish on the real estate space. The stocks like Prestige Estates, 20 analysts track the stocks, track that stock, no sell recommendation there. Sobha, 17 of them track it, no sell recommendation. In fact, all 17 of them are buy recommendations. The Macrotech, 19 analysts track it, 2 sell calls. DLF, 1 sell call. The only one that has more sell calls is Godrej Properties and Oberoi Realty, that is 6 sell calls each. And for them, there are almost 20 analysts tracking that as well. Now, after these stocks have rallied the way they have, the stocks have moved well beyond the consensus price targets of individual stocks. Now, Prestige Estates has a consensus price target of 971. From current levels, that is implying a downside of 25%. Sobha is implying a downside of 23%. Macrotech is implying a downside of almost 18%. DLF as well, another 16.5%. So it goes to show that these stocks have rallied a lot, and now they're pricing in their full potential. Well, as Sonal was highlighting, people are buying a lot of houses, but I'm sure they're buying a lot of shares as well.
Oh yeah, Hormoz, absolutely. Only time will tell whether the analysts are behind the curve and they need to, upgrade their estimates, or whether the stock price is, perhaps running way too ahead of fundamentals. And I think we'll have the answers as the time unfolds. Thank you very much for that interesting piece. We have Deven Choksi joining in, MD at DR Choksi FinServe. Deven, good afternoon. So what do you think? It's a sizzling rally, but today's moves, double-digit gains. I don't know, is there some fresh trigger, or is it just excitement maybe on some budget swaps being expected? What are you hearing?
Good afternoon, Sylvie. Well, obviously, I think there are no major changes which have happened between yesterday and today. As far as I think the fundamentals of the businesses are concerned, they remain pretty much same. However, I think the larger issue remains here, that market, whenever it goes down into any kind of a price correction, there is an immediate amount of pool of money which is coming in ready for investing into the market. Because of a significantly large sum of money waiting in the pipeline for investment, so any price correction is being taken as an opportunity by most of the investors. And there may be a situation wherein you are seeing the rotation of the sectors. Suppose today, if the time has come for real estate because of some positive news flows happening across, I think, 4 or 5 companies as far as the developments are concerned, or for that matter, the auto numbers which came out and they have started giving some indication about period going forward for the full financial year. I think the positive news flows, along with, I think, the pool of money which is lying at the sidelines, they are suggesting that the market doesn't want to go down at all during the price correction. And that's where we are seeing a bounce, and very sharp and smart bounce that one is experiencing currently.
Devin, hi, welcome to the show. The other index which is doing well today, in fact, is at a fresh all-time high, is the S&P BSE Utilities Index. It's up around 3-odd%. Stocks such as Torrent Power, NTPC, Adani Power, all of them continue to gain. What would your approach be towards any of these specific stocks?
Well, I think as a sector, I think demand scenario continue to remain buoyant. On the other side, due to the controlled input prices, particularly the thermal coal prices, is definitely, I think, suggesting well for most of these companies as far as their margin outlook is concerned. But more importantly, I think the chase is also because of the fact that there is a demand to include new stocks into the portfolio, given the size of new funds coming into the mutual funds portfolio. And that's where probably you are seeing some of the infrastructure companies, be it in power generation, be it in distribution and transmission. I think that's where probably we are seeing the larger amount of actions happening into the portfolios. As I made a point before, nothing has fundamentally changed beyond a point in any of these companies that augurs for the higher amount or sharp amount of rise. But the fact remains that the liquidity is driving most of the market actions at this point of time.
Okay, all right, Devin, hang on. Let's discuss Hindustan Copper. Well, the stock has hit its highest levels in 12 years today, and it's been momentum driven. As valuations, well, they appear fairly heady. Let's do a quick analysis on what has got the street excited. Hindustan Copper, first up, is the only pure listed play on the copper price in India. Hindalco and Vedanta, well, they're players on the treatment charge and refining charge, which is known as TCRC. So they are converters if you're looking at copper as a play out there. Hindustan Copper is the only pure play on copper prices. And the reason the street is optimistic on copper prices is due to supply concerns coming in from Peru, Chile, as well as Panama. Copper prices could also trend higher because of the weakness in the dollar. This is amid the expectations of rate cuts. And also there is some optimism that China could push through another stimulus package. Now, fundamentally, though, things look stretched on a trailing basis. In the last few years, the best EPS that they've delivered is 3 to 4 rupees. That means that the stock is trading at more than 85 times. The biggest holder in the company, though, is the government of India. LIC, they're the second largest holder in the company, and you have Quant and SBI. Both of them are the two notable mutual funds that hold stake in the company. Now, part of the street is a little bit optimistic. Will the government of India go ahead and divest that stake? Well, time will tell, but that appears to be some optimism that's playing out. Now, besides supply concerns, demand as well could look up. As the government of India's infra push, well, it bodes well for copper demand. Remember, 40% of the copper that's consumed in India is attributed to infrastructure as well as the construction sector. So that could be one factor. But the bigger push is that the push towards electric vehicles that could benefit copper demand in particular. This is because reports suggest that an electric vehicle, well, it requires nearly 80 kgs of copper. That is nearly 4 times a normal vehicle. That's a normal conventional vehicle. So put all this together, valuation-wise, the stock appears very, very expensive. But the street appears to be looking ahead on copper prices, copper demand, and will the government of India do something with that 65% stake that they have in the company? Explains why the stock today has moved to the highest we've seen in the last 12 years. Devin, what's your view on Hindustan Copper? Who would have thought 280 rupees headed towards 300 rupees? I think just a few months ago, the stock was not even 200 rupees.
Well, I think it is already quoting at about 80 times price earning. And yes, as you rightly explained, I think most of the things are in price today, even though I think we do believe that there is going to be a growth and sustained growth for the copper as a commodity, largely because of the fact that the demand for copper is increasing due to the computing power which is required in the data centers. And also, I think the fact that the applications like electric vehicle could also be demanding higher amount of copper going forward. And given the fact that some of the plants in the global markets have possibly shut down, and which has created a situation of the premium pricing on the copper, I think the most of the things have started moving in that direction. That's why it explains how the copper stock prices have moved. In my viewpoint, Hindustan Copper kind of company has always had a good potential. However, when you look at the performance of the company financially, I think it speaks a lot about, the requirement of sustaining this kind of a growth program that I think the demand scenario is providing to them. Should they end up providing the growth in a successive quarter basis, then probably to a certain extent you can justify this particular valuation. But I feel that most of it is in price. Maybe I think there is no scope for any negative news at this point of time. Should there be any, maybe I think the price correction could also be equally sharp going forward.
Okay, all right. Devin, stay on. We will take a very quick break on that note. Come back with more on the other side with the news of the markets retaining, the bulk of that gain, 21,650, with the banks really supporting the bulls today. We'll come back and then we get a conversation going with Sanjay Parekh, founder and CIO at Sohum Asset Managers, on the other side.
Welcome back. Well, just watch out for a couple of stocks which are under pressure on a week-to-date basis. So just want to point out something like an LTI Mindtree, which is down around 1.5%. It's lost close to around 7% in terms of market cap at current reckoning on a weekly basis. Hero MotoCorp too is down around 1.5% odd today, and it's lost close to around 5% on a week-to-date basis. So there is some amount of pressure which is coming into specific stocks. In fact, even TCS is a bit sluggish at this point in time and has lost around 3% this week. But nonetheless, what hasn't is a whole host of banks which are in focus and buzzing on the upside as well on the back of their business updates. Abhishek is here to tell us more and what it means. Abhishek.
Well, Ekta, to begin with, Bandhan Bank came out with its provisional business update. Deposits are up 14.8% YOY and about 4.8% sequentially. The retail deposit growth is on the lower side, so it's been made up by the bulk deposits, which have grown by 12.9% on a sequential basis. So watch out for cost of funds, which may rise on a sequential basis. However, advances growth have been pretty robust at 18.6% YOY and about 7.7% on a sequential basis. For AU Small Finance Bank, the entire focus, it seems from the numbers, is that they are interested in gaining a deposit franchise. So deposits are up 31% YOY and about 5.8% sequentially. This has come in at a cost because the average cost of funds has now increased to 6.9% when compared to 6.7% in the previous quarter. The AM growth is pretty robust at 30% YOY and about 6.5% sequentially. Poonawalla Fincorp, strong disbursements. However, the tenure of the book might have declined in this quarter. So disbursements are up 159% YOY and about 11.8% sequentially. The AM growth is robust at 56.9% YOY and more than 8% sequentially. Asset quality, they are expected to improve further. Remember that in Q2, gross NPA ratio was at 1.36% and net NPA ratio was about 0.72%. Bajaj Finance, now best AM growth that you are seeing on a YOY basis in last 16 quarters of 4 years. So customer base has grown robustly at 21.7% YOY and about 5% sequentially. That's helped the AM growth of 34.7% YOY and about 7.1% sequentially. Even in the previous quarter, the AM growth on a sequential basis in Q2 FY24 was pretty robust. Cross-sell rate has improved to 7.47% when compared to 6.5% sequentially. This means that the loans which are coming up for fully paid, they are able to further cross-sell, to those customers. New loans, they are up 25.8% YOY and about 15.6% sequentially. In Q3, the new loans have actually seen stronger traction due to festive season every year. Back to you.
Okay, all right, Abhishek, thank you very much for that. Big moves coming in over there. And of course, Bajaj Finance, the real star today. But the stock is still about 5% away from its 52-week high. Deven, so you just heard the raft of those updates coming in on BFSI names. A specific take on Bajaj Finance, if you could tell us your current view on the stock after this rally, and also beyond the nifty names, a lot of the mid-cap banks and NBFCs that have reported. Anything that stands out for you?
So, well, particularly for Bajaj Finance, as we go by the direction that the company has given of touching 5 lakh crore AUM somewhere in 2025, it gives you the kind of clarity and the confidence both to stay invested in this kind of a company who is not only well capitalized, not only has a lower cost of fund comparatively on the NBFC side, but at the same time have a very sustainable business growth model where the credit is being extended to the individual retail credit buyers, the borrowers, against, I think, their personal needs, household needs, etc. So in my viewpoint, I think this particular company becomes a good, compelling proposition for every correction. Entire 2023, probably, I think this stock underperformed. I think it did not perform well with the market. And today, I think with these kind of numbers coming up again, which is suggesting a validation of the thought process and the same time analysis, going forward, the company would probably be seeing a higher amount of growth, along with, I think, the digital platform that they have introduced, which is helping them in not only issuing loans at an effective price, but at the same time, I think, giving them good amount of effectiveness on the efficiency side also. So we remain bullish about the company, and the corrective downside, which we have mentioned even past also, was a good opportunity to buy into the stock again. Those who have not, I think this is a good opportunity to stay invested or maybe buy at dips again.
Okay, all right. Deven, well, we thank you on that note for joining in this afternoon and giving us that advice on a whole host of sectors as well as stocks. The markets are still holding well in the green with a gain of close to under 130 points, as I mentioned earlier today. 21,680, that's a crucial level. We'll have an expiry move maybe in the next 10 minutes or so. So let's see how that plays out. But let's welcome Sanjay Parekh, founder and CIO at Soham Asset Managers, who joins us on the show. Hi, Sanjay. Good afternoon, and wishing you all the best for 2024, you, your team. And we wish all your clients as well. Hopefully you make a lot of money for them. But let's find out how you're thinking about the markets at this juncture. We've had a good run in the last, in the last year or so. I think you're more inclined towards the large cap names. So do you think that continues for this year? And if yes, from the large cap basket with due disclosures, what's that one stock or couple of stocks that you're really bullish on?
Yeah. Thank you, Nigel, and wish all of you a happy, healthy, peaceful, and prosperous year. So yes, we had average 78% large cap over last 9. I mean, ours is a large cap oriented fund, and over 19 months, and we always believed, that there is significant alpha possibility even there. And as you see the 1 year divergence within Nifty, the top 10 average of the top 10 has given 65% return, while the worst of the top 10 is 4%, when the Nifty return is 18 to 19%. So, and that's what we've tried to do, of getting the best 18, 20 names and positive. I mean, luckily we have good alpha over last 18 months. So our market view is, on valuations, as you would appreciate, are not cheap. If we take earnings, which are reasonably at 1100 for 24-25, at 20 times we would be at 22,000. But 24-25 is yet to start, so maybe 6 more months and 6 to 9 months more, and that's where it gets reasonable. But if we move to 25-26, which is 15 to 18 months away, there broadly, if we take nominal GDP plus growth for earnings for Nifty, we can broadly get to 1250. And at 1250, and now India's average price earning over last 5 years has been around 20. So on a terminal value, 20 times, it's 25,000, which is quite good. But if on an annualized basis, it would be 12-13% return. So that's what we think, that, we could be pausing for 6 months or some reaction and a good time correction, a little bit of price correction, and then we go back to that level for next 15 months. And that's what our view is. So this is a zone where we think it's more to be less active, and pause is what we think is the right thing to do.
Okay, well, Sanjay, you mentioned pause, and that's one thing which didn't take place for the broader markets, the mid caps as well as the small caps last year. What is your sense? I mean, your allocation is less. Was there any kind of feeling of missing out? And what is your sense for this year? Do you think that gains will probably be much more tempered as compared to the large caps, and hence maybe there is no sort of need to reallocate your portfolio?
Yeah, no, so we are happy, because our positioning has been that in mid and small cap, our average mid and small cap weight was 22%. And luckily there again, we could get very good winners. Some of it we still hold. Some of it, we big book profits. In the EMS space, cinema is what we held on. In railways, Jupiter Wagon was almost 3x for us. We still own Angel, which we bought. It's all again 3x for us. So we do buy the right businesses at the right valuation. And with that mid and small cap also, we're happy that our alpha was significantly higher at 19 months at almost 13.5-14% for Nifty TRI. This year, we believe, there is certain segments of mid and small cap where clearly there is froth, and one has to be very, very selective. There are opportunities even in mid and small cap, but the margin of safety has to be higher because the broad flows are, where the valuations are not cheap. So one has to be very, very selective have the right margin of safety, the right framework, and then look for opportunities. That's what we are going to do.
Okay. Sanjay, hi. Good afternoon. Season's greetings to you. Just want to get your good afternoon. Just want to get your thoughts on the entire new age space, because that's where we've seen an appreciation in stock prices, and underlying business fundamentals also seem to be improving. If you were to allocate more money to technology, would you look at some of these new age players, or even newer companies that may come in list, or would you look at traditional IT services?
No, so traditional IT services, we are underweight now for 19 months. We continue to remain underweight. You see in the interim some outperformance, but we continue with our stance because we're clearly not seeing earnings growth even of 10% plus. And that is a worry we have. They're great returns, ROCs are very high, payouts are very high, and hence we consistently remain underweight. On the new age digital companies, we do own, delivery, which is in the logistics space. We do own Paytm, which is in the payment space, and stroke the lending franchisee that they have. And I think what we are seeing is that where there is a critical mass, there is a size, they have significant cash, they have a right to win, and they are last one to, fall down. And they stop burning cash, which is the most important criteria. And then, reasonably, they would be profitable over 25, 26, 27. And if you take those 26 and 27 numbers to NPV, there is an upside. So these criteria, based on these criteria, both of them we like and we hold them. And we believe that they have a clear right to win in the respective space. And that could be good compounders over the next 3 to 5 years.
Okay, all right. Sanjay, I wanted to ask you about one of those stocks that you think, has run its course from your portfolio, something that you'll have lightened your position. If you could, tell us about that. Because as you said, many stocks are up twice, thrice as well. But some of them could have run a little fundamentally ahead, right? So you want to tell us a couple of themes, a couple of stocks that you'll have lightened position?
Yeah. So I tell you, Sirma is what we already booked profits. It was, in hindsight, a little early, but we genuinely felt it was overdone and we booked our profit. Angel One is, has gone up 3x from the last 12 months. And again, it's a great franchise, run very well. They've grown. The investor base, they're profitable. They would do at least 1,100 crores of profit, which is free cash flow. But we think, it's run too fast. We do own it because we don't keep buying, selling, and we did book some profits. But I think it's one of them which you said, which is now not cheap. So that's but we do like them over the next 3 to 5 years. We think it's a great franchise. So we do own some of it. But this is one which I think is run faster. This is where we would not want to buy. We'll hold on for a while. That's okay. But
do you think? Sure.
Yeah, please.
Sanjay, do you think there's some amount of froth in the entire real estate space?
Yeah, so real estate space is the single largest asset, right? Equity, it's larger than equity, right? Or the ownership wealth of in real estate is larger. And the overall space of listed was pretty small. So we saw that bump up and, almost now 2.5 times from the lows, certain stocks at 3 times. But the opportunity is very large. But now when we see that, real estates are clearly NAV. You have to look at the net asset value of the company. There is some profit earning capacity. You can give some premium. But we see now that, the upside is limited in a lot of them because most of the NAV is getting captured. Even the future potential is getting captured. So now one has to really dig hard, look for those, mispricing if there is any, and be careful now while investing into real estate. But as a theme, we are overweight. We own Century. We'll continue to own it. But we'll be very selective now to add to our real estate exposure.
Okay, all right. We will leave it on that note. Sanjay, thank you very much for joining in, and once again wish you a fabulous 2024. Do have to take a quick. We do have to take a quick break on that note. We'll come back on the other side, and as usual, all the buzz from dealing rooms coming up in D Street Chatter, and then some final trading calls with Mitesh for the last half hour.
Welcome back. Well, a couple of heavyweight stocks actually are moving higher. Reliance Industries, well, that was one that was holding in the green. I think HDFC Bank, just pull up HDFC Bank. That's the one that's pulled up the Nifty as well as the Nifty Bank. Explains why the Nifty is holding with a gain of around 0.6%. And the Nifty Bank is now up close to around 1%. HDFC Bank getting that leg up. That's the reason why we're still holding well in the green. Bharti Airtel is the other one that's now moved up close to around 1%. But it's that time of the day when Nimesh joins us on our special segment, D Street Chatter, to tells us what is he picking up in terms of dealing room action. Nimesh.
Hi, Nigel. The markets are back with a bang, right? Just 2 days of cool off and a bit of correction, and we have pulled back very sharply from the low. So, big moves in the markets today, especially in the Nifty names. Unlike yesterday when the markets fell sharply, I had said, it's not backed by large FI buying. That's the case today as well. The markets are up at day's high, but it's not backed by very large buying. There is a small market at close basket buying in some Nifty names today. So you'll see some reactions in some Nifty stocks in the last 30 minutes of trade. But it's very small is what I understand from a flow perspective. As I said, for the last many days, the big theme seems to be sector rotation. So Today's a day for rate sensitive. All the real estate stocks are buzzing in trade. The realty index is up 6% and there is a big move in the individual names in the real estate pack. Even the financials have done well in trade today, largely on back of strong Q3 updates from most of the financial names. So whether it's NBFCs or banks, most of them have reported very strong commentary going into Q3. A bit of profit booking in the OMCs, largely on back of the CLSN note where they've downgraded all the OMC stocks, but largely from a flow perspective, a small market at close basket buying, but the pullback looks like it's more of a short covering rather than big buying from larger FIs.
Okay, and what about stocks, Nimesh?
Well, Ekta, in terms of individual names, the first stock is Anantraj Industries. While the entire real estate pack is doing good today, Anantraj is a bit consolidating, in a very narrow range. I understand the company is likely to raise funds via QIP very soon, so that's something to track as far as Anantraj is concerned. The second stock is Delivery. For the last couple of days, we've seen some upgrades as well on Delivery from FI brokerages, and some bit of buying is also resumed in that particular stock. In fact, I understand a leading domestic mutual fund is an active buyer in Delivery of late, and hence the delivery volumes are quite high in that stock. The third name is Castrol. While the stock is almost at 52-week highs, there is some signs of profit booking at this level. So there is selling pressure from a leading FI desk in Castrol in today's trade. So expect high delivery volumes there as well. And the last one is Infosys. The entire IT pack on the back of the JP Morgan note has seen some bit of traction, but Infosys stands out. As I said, there is MOC buying. Infosys has some bit of MOC flows as well in the last 30 minutes of trade. And also there is a Morgan Stanley note in the morning. They put out a tactical buy on Infosys as well out of the earnings. So largely on back of that, within the IT names, Infosys stands out on flows as well as an upgrade.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's get in Mitesh back. Mitesh, at around 310 odd, what are the picks you have for us? Either a buy or a sell call?
So given the fact that we are closing in the day's high, I think taking BTST trades might be better. And Axis Bank comes on the list. BTST here with a stop at about 11.10 for targets of 11.35.40. And Bharti Airtel is the other one, which I would recommend taking a BTST with a stop below 1036 for a target of around 1065.
Okay, all right. Mitesh, before the day ends, just wanted to ask you, what would your position be on a couple of these pharmaceutical and healthcare stocks, considering that they've seen profit booking today, but are coming off what was a good run up?
See, the entire pharma pack looks very strong to me. And while you'll have days which will be giving you a red candle and some profit booking will happen because they are quite overbought, I think the worst which can happen is that these pharma stocks go into some kind of consolidation, give their pullback to their 10-20-day averages. But I would be a buyer at those. So I think the top picks in the sector would be Lupin for me to begin with. DVs as well looks very good to me. Granules is something which I've repeatedly given buy calls upon. So once the pullback is over, I think these are the names to be watched.
Okay, all right. Thanks a lot, Mitesh, for joining and giving us those details. By the way, DCM Shriram, they've signed an MOU with the Gujarat government to invest 12,000 crores by 2028. It's a bull market, right? People putting in money, adding capacity, the street likes it, they buy it immediately, and that's why that stock moved high. I think earlier today as well, we had Torrent Power that was talking about making additional investments, and that one as well was up closer on 9%. But independent market expert Amrish Balika joins us on the show. Amrish, well, everyone's saying it's going to be a stock-specific year, 2024. Give us your stock.
Hi, Rajul. The stock is Gujarat Gas. It's India's leading city gas distribution company across 6 states and 1 union territory. Have about 37,000 kilometers of gas pipeline and about 806 CNG stations. 20 lakhs plus domestic users, 14,700 commercial users, and 4,300 industrial consumers. In calendar year 2022, energy prices had shot up, and this resulted in nearly 75% of their Morbi industrial ceramic customers actually shifting away. They, in fact, went into propane gas. So Gujarat Gas volumes suffered quite majorly, and the performance got affected, and because of which you have seen the stock had underperformed in the last 12 to 18 months. Now LNG prices are corrected. In 2023, we saw it correcting. In December itself, we saw a 30% correction. So, I suppose over the next few months, you'll see the lost customers actually coming back. And I expect the EBITDA margins to be around rupees 6 per standard cubic meter. And the volume growth over the next 2 to 3 years should be about 13% CAGR. So expected EPS for FY26 is rupees 26 and the target price is 650. So we have seen the stock moving decently well in the last couple of days. In fact, it's already moved up close to about 70-80 rupees from the lower side. So I think upside is another 150 rupees from here.
Okay, all right, got that. Amrish, hi, good afternoon. Must ask you about this real estate sort of craze that's going on out there. Sure, I mean, there are underlying strong demand trends, no one's denying that, but how would you approach the market, and would you buy anything afresh? Or, I mean, if you are a contrarian and if you're talking about taking profits, then is there any particular stock which looks a little frothy to you now?
No, although we had the reality index, I think was the best performing index last year, but I still believe there's some more upside because there's always a sort of a gap between the markets doing well and the real estate doing well. And I think that has started last year because whenever people make money in the markets, the first thing they do is upgrade themselves. I mean, they buy cars, they buy a new house, they travel, they spend on white goods. And what we have seen a bit different in the last 2 to 3 years is that most of the CXOs and senior employees, I think the wealth has gone up decently well because quite a few of them have got ESOPs and they have sold ESOPs. So because of which you have seen even the luxury housing has in fact done better, like much better than affordable housing. But then over the next possibly 2 to 3 years, I see both luxury as well as affordable housing doing well. So I believe that the real estate stocks can still move further from here.
Okay, just want to point out that DCM Shriram has now spiked up to an 11.5% gain. So that stock should come up for you. Remember that they've signed an MOU with the government of Gujarat to invest a proposed 12,000 crores by 2028. Just look at the kind of move that we've seen for DCM Shriram. Amrish, any thoughts on this one?
No, DCM Shriram I've not really tracked it very closely, but then surely, I mean, this sort of a capex, which is huge, I think will be sentimentally be positive, no doubt. But then I think, I mean, we need to see as to how that plays out. So I really don't have a sort of a view on this stock, but short term, yes, because of this news, it can spike up.
Okay, all right, Amrish, we will connect with you, after a couple of minutes. Right now, we have a very special conversation lined up. At the very heart of the Infosys success runs a love story between Sudha and Narayana Murthy. Not only did she unknowingly become one of India's most successful angel investors, providing Infosys with 10,000 rupees as seed capital, she was also, in the words of their daughter Akshita, the virtual COO to the CEO. So when she asked to formally join Infosys, Murthy turned her down, saying the family members should not join the company. Today, Murthy says he regrets the decision and has changed his position. But when asked if Rohan Murthy would play a role at Infosys, his answer was an emphatic no. Listen into some excerpts.
The story of Infosys, one of India's most successful post-liberalization stories, has been well told. But what is less well known is how Infosys the business finds roots in the love story of Sudha Murthy and Narayana Murthy. A self-confessed leftist, a 28-year-old Narayana Murthy fell in love with Sudha Kulkarni, an engineer who had stormed her way into what was formerly Telco, now Tata Motors, becoming the first woman to work on the company's shop floor. A few years later, she would unknowingly become one of India's best angel investors, putting down 10,000 rupees, virtually all her savings, to fund Murthy's dream.
You had a partner who was equally ambitious, who had her own aspirations. In fact, I want to understand from you the day when you told Mr. Murthy that you should be part of Infosys as well, because you were part of the story from the very start. You provided the seed capital. You, in fact, provided the very differentiating idea that Infosys should focus on the export market as opposed to the domestic market. And when you finally thought that this was an opportunity for you to be part of the company, he said no. And that wasn't an easy one for you to accept.
No, but one more important thing, she was as qualified in most ways, more qualified than all the 6 or 7 of us. That is also very important. Not that she was not qualified.
Exactly.
So therefore, that's very important, yeah.
So why did you say no then?
No, again, you know, I had this feeling that good corporate governance means not bringing family into it. Because those days, it was only family rule. All kinds of children used to come and run the company. There used to be a violation of all laws. But later on, Shirin, I must tell you this, a few years ago, I had a long discussion with a couple of professors of philosophy from two extremely well-known universities in the world, and they said I was wrong. You know, they said, Mr. Murthy, you are wrong because as long as the other party has the merit, whether it's your wife, your son, your daughter, as long as that person has the merit, as long as they go through the normal procedure, you have no right to prevent that person from being part of the thing, because you are then taking away some of your right. That's why, I don't know if you remember, when we had the discussion, I openly said I was wrong. Now I don't believe this. I think what I was doing those days was wrong. I was wrongly idealistic. And in some way, I think I was influenced a lot by the environment of those days.
Now that you acknowledge the fact that you were wrong about someone with merit who happened to be a family member coming back or being a part of Infosys, today, I mean, if your second child were to say that I want to be part of Infosys, what would you say? If Rohan were to say he wants to be part of Infosys?
I think he's even stricter than I am in these ideas. He will never say that. Never, never. First of all, I am just a shareholder of Infosys. I have not been consulted on any issue in Infosys in the last, since August 4th or 5th, 2017, when Nandan took over. Not once. It's the right thing. I mean, he's doing it the way we all did, okay? So, apart from being the largest family shareholders of Infosys, we have nothing else to do with Infosys. That's the reality.
Welcome back. Well, just a couple of seconds to go before the day closes out. Amrish, very quickly, NTPC, big mover today. PSU party is anyway, well and truly on. Your thoughts on the stock?
No, I mean, clearly with their focus on renewables and the way they have been performing, especially if you see the last 3 to 4 quarters, and now with a fresh MOU being signed with the Gujarat government, I think all these are quite positive. And NTPC still has a couple of legs up. Possibly, I mean, we could see another 10 to 15% up from here.
Okay. Okay, well, Amrish, there is some news coming in with regards to the Defence Ministry signing a contract worth 473 crores with Jupiter Wagons, and then there was one on BEML also. There's a contract signed worth around 329 crores. So that seems to be the key theme which is playing out as well, and could be a possible theme playing out in the budget or in the next couple of weeks. What's your sense? How would you approach a couple of these plays if it is an opportunity indeed?
No, see, it's been a huge opportunity, no doubt. But I think, most of the stocks have already run up. I mean, they've become multi-baggers, quite a few of them. I think nearly all of them have become multi-baggers. And this has discounted the sort of order flows which have come. But I've been saying this earlier also, but we still are not sure as to how that execution can happen. Because, I mean, if you're talking of BEML, yes, possibly it can happen. But then if you're talking of Jupiter Wagons, I really don't know whether they'll be able to execute multiple times the sort of orders which they're used to getting in the past. So I think that's got to be seen. So that's a big, that could be a big red flag going ahead. So at these valuations, I'll not really buy fresh.
Okay, all right, Amrish, we are down to the close now, so quickly wrapping things up. It's been a strong day. Market opens strong and managed to retain all of those gains and then add some more, because we are ending pretty much at the highs. 21,671 buyers came in, and they came in everywhere. They came in bank stocks, they came in NBFCs, they came in frontline consumer. Haven't spoken about this sector too much, but today your Britannia, Nestle, Tata Consumer, Titan, all these stocks have been up and about. And on banks themselves, I mean, IndusInd Bank, Axis, HDFC Bank, you can't complain today because of the kind of moves that came in. Quick check on the Nifty winners, and Bajaj Finance is topping the league tables, 4% up on that very smart update for the third quarter. Then comes in Tata Consumers, and then the stock that we were just discussing, NTPC, as well as ONGC. Actually, overall PSUs have been strong on the index, beyond the index. I mean, PSUs, another strong side of the market. Reliance did its part. About 0.5% up on Reliance, adding to the tally. On the flip side, some selling in BPCL and its other peers, the non-Nifty OMCs as well, because of a CLSA note. They are quite cautious in the space now. And technology deserves a mention. JPM has turned a little more optimistic on the sector, but that didn't show up on too many stocks. LTI, Mindtree, HCL Tech, even TCS, all of them are down. The one that did react positively to that note was Infosys, because that is where JPM has gone from, I think, a neutral to an overweight, straight out overweight. So that was a stock that performed well.
Okay, all right. So that's on the frontline indices. But what really stood out and was the flavor, the sector of the day was the real estate space. BSE Realty Index going home with a gain of around close to 7%. A lot of the stocks seeing double-digit gains. So Puravankara is up around 13% at close. DLF, which is up 6.5%. Brigade Enterprise, which is up around 6.5%, and Sobha, which really started it all with double-digit gains as well. A couple of other stocks which stood out were a couple of the banks, so Bandhan, AU Small Finance Bank, Poonawalla FinCorp, DCM Shriram, which saw double-digit gains on the back of news, Jupiter Wagons, BEML, all of these stocks gaining on the back of possible order wins, investment news. So these stocks gained anywhere between 3 to even double-digit gains by the close of trade. A little bit of profit booking on the likes of Mankind, JB Chemicals, Gland, TVS, Metropolis. Remember, a couple of these stocks were big gainers in the past couple of trading sessions. So maybe there is some amount of sector rotation taking place from pharmaceuticals and healthcare to maybe the real estate space.
Well, on that note, though, let's wrap up on this edition of Closing Bell. Markets Forward comes up next, so you stay tuned.